Welcome back to Fast Market here on the Schwab Network. It's time for a cash tag segment. Let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right, so we're talking ROST stores, discount retailers, big competitor of TJ Maxx and TJX companies. You know, the stock's just below two-year highs, a little bit of weakness going into this report after the close. Landon, are people trading down for these names and have inventory levels that kind of the bigger companies are getting rid of that end up at ROST stores, kind of supporting this strength that we've seen in the stock?
Yeah, I tell you what, I mean, the mentions, the web visits, the happiness, everything that we've got kind of points towards ROST stores doing very well. We agree with the stock price running up like it has, you know, and frankly, we see this dip as a bit of an opportunity. So when we look at, for example, web data is very strong. It's up about 26% on a year-over-year basis, doing better than TJX, which, you know, I think it's important to look at that one because they reported decent numbers and got punished. Very similar to Walmart. Decent numbers got punished. I mean, you've got to have a target style beat in order to get a big run up. So I think that one thing we've got to consider in these markets is what's the valuation, what are expectations? If the stock's high, expectations are high. If the stock's low, expectations are low. And I think that investors are kind of showing their hand over the last few reports that that's what's happening. But mentions are very strong. They're up about 23% on a year-over-year basis for ROST stores. That's the 90-day moving average. If you zoom into the 30-day moving average, get a little tighter, it's up 45%. So in other words, it's getting a little bit stronger towards the end there. So we've got we've got strong data out of ROST stores. The stock is very, very high. Happiness levels are kind of in the middle. They're not bad. It's 70%, a little bit behind TJX, but beating Burlington pretty steadily at 67%. You know, last quarter we saw that their same-store sales were up 5%. They reduced their inventory 15%. This quarter, in the last couple of months, they've added, I think, 51 stores, a total of almost 100 this year. So they're going from 2,000 to 2,100 this year with the goal of getting up to 3,600 over the two main brands over the course of the next few years. So they're expanding, doing really well. Everything that we've got is very positive on them. The only thing that was negative, I guess if you want to look at it that way, is that the stock was so high. And so expectations were very high. We've got a little bit of a cure for that right now. You know, they're pulling back and going into earnings. So I think it could be a setup for a little bit of a bounce on earnings, in my opinion, just based on what we're seeing. But again, are the expectations too high? Is this little pullback that we're seeing now little relative to what we've seen all year from this company? Is it enough to lower expectations where solid numbers, which may be expected, could still push the stock up? I'm not sure about that, but I do believe that we've got solid numbers coming.
Landon, in your mentions slide that you brought us, it looks like it's diverging there. The mentions versus the price of the stock. Now, is that mentions doing the normal ebb and flow and the price of the stock just running away? Because I see divergence there at the far right of that graph.
Yeah, in the last couple of weeks, we've got just a small pullback in the 30-day moving average of mentions. Now, keep in mind, that's the one that's still up about 45% on a year-over-year basis. So it was maybe up 55, 60% a couple of weeks ago, but it's pulling back to up 45%. So it's still very bullish. But yes, over the last couple of weeks, there's a little bit of change between those two where you could argue that it's a bearish divergence. But also keep in mind that, you know, that's not part of the quarter that's being reported. That's part of what would be guidance. But it's also getting somewhat nitpicky to get into that last 2 weeks. I would much rather see that going up because then I think guidance discussions would be much more positive. There is a chance that, you know, they could talk about just the last little bit not being great. You know, we'll see. You guys talked about yesterday how CEOs need to take classes on earnings reports. We'll see how this one goes. But yeah, I think it's a very small divergence right at the end, but it's still strong data when you look at it on a year-over-year basis.
Yeah, you know, Kevin and I have been discussing his theory about high bar, low bar, right? So TJX, I'm not surprised that it pulled back even on a good report because the bar was so high. That stock was just off all-time highs into earnings. We're seeing that now with ROST stores at this point. And then listen to the commentary out of the Walmart CEO today, Landon. It's maybe some warning flags where, hey, you know, they've had good runs, but they're going to get punished if they don't hit everything on the dot, especially guidance moving forward, and possibly a softening retail cycle.
I agree 100%. And now we're kind of getting into that like second and third order effect of like the psychology of investors, because going into all these reports, it was high bar, low bar, very simple. But now you've seen what happened with Walmart and how they, projected out a little bit of pessimism. So they sold off ROST stores sold off with them, but now that they're about to report. So have expectations been lowered and all of the potential naysayers are already sold out, or are we still in that first order high bar, low bar? So that's kind of the trick of investing, is understanding the psychology of these investors, the hedge funds, and all of those. I don't know if this pullback is enough to really lower expectations significantly, but it is better than them, pushing up to higher highs today. So if you're talking about going into this trade, being bullish, I'd much rather than pull back today than be storming higher. So we'll see what happens, but it is a bit of a psychology, mindset that you got to think about.
Right, definitely uncertainty out there as far as the retail space goes. All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data on ROST stores. I mean, Kevin, we've been hitting on this, and it came true with Target versus Walmart. It came true with TJX post earnings. That thing fell, even though it was a pretty good report, as Landon mentioned. So their data is still positive, but at the same time, it's pulled back pretty significantly today.
And this last divergence, Landon's right. Much like Walmart, it doesn't affect the last quarter, but it affects the guidance.
Right.
If that affects the way they guide, look at Walmart's price action. Now, I'm not saying that's going to happen. We have no idea what they're going to say. Off price and the way they purchase their goods and the way they keep costs down by, not any fancy stores or fancy lightings or things like that. They keep costs real low. Maybe they can navigate these waters, but a lot of the signals we're getting from other places just aren't showing that. Matter of fact, the ones